Mark, it's all the rage on this set, this T+1 drama. From your perspective as a former trader, talk to us about the ripple effects. Is this what people are talking about this morning?
No, not really. Not frontline market practitioners. Look, it is a big issue for those who've got to settle these trades. It's a big issue for the industry. And of course, there will be some knock-on effects. But essentially, for the portfolio managers out there whose full-time job is to buy and sell stocks, even if they're having to think about their FX hedging dynamics, about that change in the settlement date, but they change in the swaps, sure, they're worried about the back office process. They're worried about their hedgings in place. But is it changing the dynamics of how they pick and buy and sell stocks? No, not really. So it's not for the frontline practitioners, even though it's a big issue for the industry overall.
But it feels like there's also an FX component to this as well, right? That there's a T+2 dynamic in the FX space. Talk to us about the trade in FX in preparation, perhaps, for this, at least in the short term.
Well, I mean, absolutely, it's going to affect how your swaps, and you're going to have suddenly a load of equities people who probably haven't paid attention to exactly how the FX exposure is hedged. And I shouldn't just say it's equities people. It could be emerging market traders in bonds. It could be a number of people in this market who haven't thought about that extra kind of settlement risk. And it's normally so small FX that people outside FX markets underestimate the cost of this, that it can add up over time if they're not doing it most efficiently. But these are kind of processes. We're going to get some headlines of someone messing something up, of a few settlements going wrong, but ultimately people will square this. This isn't going to be deciding returns in the year. As I said, it's not going to be deciding overall decisions about which stocks you buy or sell or which bonds you buy or sell. It's just going to be getting people to be distracted on their settlement issues.
All right, Mark, I'm putting you on the spot. 20 seconds. What else are we watching in today's trade?
This week, it's really all about the inflation data coming through later on in the week. Today is obviously super quiet, but I think the backdrop themes are the same as they were last week, that we're going to continue to see higher yields. I think that overall, the dollar is going to continue to stay pretty big, but despite that backdrop of higher dollar, higher yields, I think risk assets will do okay.